Hi, I'm Pat-Keon, a research analyst here with Lipper, and I'm here to talk to you about fund flows for the week ended Wednesday, June 18th. Overall, we saw $23.5 billion in net outflows for the week, which reversed a 3-week trend of positive net inflows. Taking a closer look at our macro groups, we see that money market funds were responsible for all of the net outflows for the week, as they had $28.1 billion leave their coffers. Equity mutual funds took in $126 million, taxable bond funds took in $2.6 billion, and muni bond funds had positive net flows of $117 million. In other news during the week, the Fed Open Market Committee released their minutes from the last meeting, which was followed by a press conference by Fed Chairwoman Janet Yellen. As expected, the Fed announced that they would continue to taper their quantitative easing program, as they announced another $10 billion reduction in the monthly bond buyback program. This reduces the quantitative easing down to $35 billion per month, and at this rate, it's expected that the program will be ended by the fourth quarter of this year. With that in mind, the Street turns its attention to when will the Fed start to increase interest rates. Previously, Fed Chairwoman Yellen had hinted at that they might be as soon as 6 months between the quantitative easing program ending and the interest rates, the Fed starting to raise the interest rates. But she stepped back from that a little bit during this week's press conference, saying it could be a considerable amount of time between the two events, giving the Street a little bit more breathing room. Let's take a closer look at the rest of our categories now. Moving on to equity mutual funds. As stated previously, they took in $126 million for the week. This marked their 24th consecutive week of positive net flows during 2014. Breaking the group out a little bit further, we see that non-domestic had positive net flows of $1.3 billion, while domestic equity funds had $1.2 billion flow out. Taking a look at this category over a longer period of time, we've seen that money has just poured into equity mutual funds. Since the start of 2013, they've taken in $280 billion in net flows. And non-domestic funds have played a major part here. They're responsible for 60% of the net flows over this time frame. Even more interesting, I thought, was breaking out the time periods, looking at 2013 on its own, and then taking a look at year-to-date 2014. Non-domestic funds are responsible for the same allocation in each time period, roughly 60% of total net inflows they're responsible for. I found that interesting for 2014, as you know, with all the geopolitical strife going on around the world, it hasn't dampened U.S. investor spirit for international equities. Let's take a look at our equity ETF category now. They took in $5.2 billion on the week. ETF investors were buying the Spider S&P 500, which took in $2.4 billion, as well as the iShares Core S&P Midcap ETF, which took in $1.4 billion. Moving on to their taxable bond fund category now, they took in $2.6 billion for the week. Similar to equity mutual funds, they've had positive net flows for each week in 2014. Two Lipper fund classification categories were responsible for the majority of the inflows this week, as the core bond and the core plus bond fund categories took in over $300 million each. Moving on to taxable bond ETFs, we see that $3.5 billion left their coffers last week, and one ETF in particular was responsible for the bulk of this outflow. It was the iShares 7 to 10 year Treasury bond ETF. Saw $2.9 billion leave its coffers. Let's take a look at our muni bond funds now. As stated previously, they had $117 million in net inflows for the week, and our national muni categories were responsible for the lion's shares of these inflows, as they took in $100 million. Moving on to our last category, the money market funds. As stated previously, they had $28.1 billion leave their coffers last week. While this is a large number, it's only the third largest outflow that the category has experienced this year. And for the year to date, they've seen over $150 billion leave their coffers. For this week's activity, taxable money markets were responsible for the bulk of it, as $27.4 billion left their coffers. Well, that wraps up this week's report. If you're interested in taking a deeper dive with the data, please visit us at our website, www.lipperusfundflows.com. And please join us again here next week, where we'll be talking about the fund flow activity for the week.